Good evening, everybody. Welcome to Rushcliffe Borough Council Governance Scrutiny Group meeting. I'd like to remind everybody that the meeting is being live streamed on YouTube. And recording of the meeting are available afterwards, after the council on YouTube channels, on the council's YouTube channel. In addition, under the Local Authorities Executive Arrangement Meetings and Access to Information England Regulations 2012, other people may film, record posts on social media, blogs from this meeting. The use of any such images images and sound recordings is not under the council's control. May I remind councillors to please switch your microphones off when you are not speaking. Thank you very much. Firstly, I'd like to welcome our external auditors, Jennifer Norman from the external auditors, and internal audit Gurpreet Dulay and Max Armstrong, who are our internal auditors. I'd also like to welcome our independent person, Jonathan Corsten. Welcome all to the meeting. Okay. Do we have any apologies for absence?
We do, thank you, Chair. We have apologies from Councillor Wells, and we have Councillor Matthews here as substitute, and Councillor Gordon Whelan sends his apologies, and we've got Stuart Ellis substituting. Thank you.
Thank you. Item 2, declaration of interests. Declarations of interest? No. I've just been reminded, Jonathan, would you mind introducing yourself, please? Thank you.
Yes, so my name is Jonathan Corsten. I actually used to work here at Rushcliffe back in 2006, 2008 as an accountant here. And I moved into higher education for the last 15 years. And I'm a SIP qualified accountant. I have a background in finance, obviously, but now in operational management roles at Loughborough University. But my core strength is finance. That's why my experience is, hence why I'm here. Hence why Peter and Sarah recruited me to be the independent person on this panel. So I'm hoping my experience is useful to the group. And please do ask me any questions if you'd like to ask me for my opinion. Thank you.
Thank you, Jonathan. Okay, we've got so we're on to minutes of the meeting held on the 20th of February 2025. I wasn't the chair of that meeting, and I wasn't a member of that meeting at the time. I understand we've had a question from Councillor Birch via email, which has been now resolved. Yeah, of the meeting, of the minutes of the meeting, but that question has been resolved. So thank you.
If the group would like me to share the response to that question, I can also do that.
Thank you. Okay, so not many people on this group or on this committee were here on the 20th of February, other than Councillor Regan. Councillor Regan, I understand you've read full the minutes. Do you have any observations of the minutes?
Thank you, Chair. I have I've read the minutes, and I'm happy to. Do me to.
You're okay as a full and fair reflection of the meeting?
Yes.
Okay, thank you. Okay, with that confirmation, could I have a raise of hands to accept the minutes of the meeting? Okay, thank you very much. Just need to sign them off. Okay. Okay, on to item 4 of the agenda, which is the internal audit progress report, Q4.
Thank you, Chair. Firstly, to quickly introduce myself, so I see a lot of new faces in this committee. So I'm Max Armstrong. I'm a manager at BDO, and I essentially kind of manage our internal audit plan with the council. So this item on the agenda is our progress report. So every quarter, we bring this progress report to the committee to update you on the progress we've made over the last 3 months, last quarter, in delivering the internal audit plan. So you'll see from the exec summary page that we have now completed the 24-25 plan, and our annual report will be presented to this committee in the next item. We've also started the 25-26 plan, so we've commenced field work on the main financial systems review, and then the fraud report is also an item on today's agenda, and then we'll be completing the plan over the cycle of the year, reporting to the committee in line with the timings that mirror kind of the ones that are set out on page 20 of the pack for 25-26. We also, in each progress report, provide executive summaries of the reviews that we've done over the last quarter, and this is what I'll be presenting as part of the next few minutes. The first one is a review of equality, diversity and inclusion, and this is slightly different to our usual internal audit reviews where we'd provide a single opinion against our scale. This is an advisory piece of work which uses our internally produced equality, diversity and inclusion maturity assessment that we've developed at BDO, and assessing the council against those metrics. So probably what I wanted to reflect on before I go into the detail is what we do provide as part of this maturity assessment is a position on a scale from immature to continuous improvement for the authority against 5 different areas around EDI. As an authority across the local government sector, the general framework for EDI is in the equality framework for local government. Our maturity assessment probably is a little bit further, if I'm honest, in terms of the standards that we hold to than that framework. But there are areas of overlap and the principles are the same broadly across those. What I did want to pick up on, which you will see in the conclusion section on the executive summary here, is that actually broadly the council are in line with other local authorities of a similar size and scale, particularly as there is no dedicated EDI resource within the council. It maybe seems harsh to always put it up against that far green metric that we've got in that scale. Critically as well, I think it's fair to say that a lot of the EDI effectiveness comes through culture, tone from the top, and that part of the scale. And we saw quite a lot of positive intent from the council in this area, albeit there are some recommendations we've made within this report to take it that step further. I just wanted to provide that context really around this review. So to pick up on some of the areas for improvement or recommendations that have been raised, so there's areas around training, for example, where the level of compliance with training modules around EDI, and particularly the requirements of the relevant legislation was reasonably low at 26.4%. Actually, we've kind of identified that alongside other organisations we do these reviews with, refresher training is something that can help sort of focus that. Again, looking at the action plan that the council have in place, there are areas we've identified for improvement around sort of creating smart objectives, clear actions, clear timescales, accountable officers and things like that. So if I could conclude on that review, overall what we're saying from this advisory piece rather than audit piece is there's a lot that the council doing well, but if it wants to re-push itself into that next level of the criteria on our assessment, there are some actions that it can do, particularly around policies, procedures, the action plan and compliance to do so. The second review that we're reporting to this committee is the disabled facilities grant. This is where you'll see on here where we've got a substantial moderate opinion. This is in line with our usual internal audit opinions. So we've raised 2 low findings in this review. This review focuses on the administration of the disabled facilities grant. So assessing the council's compliance with processes against its policies and statutory legislation around the DFG. And actually, as reflected in that opinion of substantial moderate, our overall opinion is that actually controls were in place and broadly, with a few exceptions, they were complied with. To draw out the findings raised here, and these were exceptions identified within our sample rather than the general rule. So one was around the approvals and having an audit trail of the approvals. the system that the council use, uniform, essentially where something gets reapproved during the application or the delivery of the works due to a change in the criteria or what's being done, that gets overwritten on the system, so we couldn't go back to the original approval within our testing. And then secondly, around quotes for contractors, there was one case in our sample where several quotes weren't obtained. There was a reason, which has been outlined in the management response to this, where actually a decision was taken to use a contractor who had previously worked on this property for continuity reasons. But strictly speaking, it's the policy. There should have been several quotes obtained. So hopefully that gives you a sense of these were kind of a minority of cases, and actually generally within our sample testing, there was high levels of compliance, which contributes to our opinion. We also have our sector update, which we provide to each quarterly meeting. This is a general kind of update on what we're seeing across the sector and topical items in the sector. I'll pause there and invite any questions on any of that part of the report.
Thank you, Max. Any questions? Yes. Councillor.
Thank you. Chair, I'm wondering about the equality report. I know corporate overview looks at monitoring the diversity and equality action plan. Should these conclusions be passed to corporate overview so that they have sight of them and can discuss them?
The update that was provided to Corporate Overview Group on Tuesday, actually this week, was delivered by the officer that was part of this audit. So it's part of the findings and the presentation that was delivered to Corporate Overview Group.
On the other one, the administration of the Disabled Facilities Grant and actions being overwritten, is that something to do with the system that's being used, or is it something to do with human practice, as it were?
So this is a system limitation where the uniform system, if something gets reapproved, overwrites the evidence audit trail of that initial approval. So what's being proposed in the management response, which I think is fair, is actually have those approved outside of the system as well, to have that audit trail where things are reapproved. But ultimately, what we found in the review was the system limitation stopping it, and that other control not being in place to supplement it.
So has that been fed back to the people who provide the system as a possible improvement?
I can't comment on that necessarily. I don't know what action has been taken by the council subsequent of that. But what the council have agreed in the management response to this is they will operate that separate control. Whether they're taking it further with the system suppliers, I can't comment on that, unfortunately.
Just to pick up Karis's points, that in the actual comment it does say we will continue to liaise with the uniform system provider to explore potential enhancements. So it has been raised with the system provider to try and correct that fault.
Happy with that, Karis?
Yeah.
Yeah, thank you. Questions? Oh,
Maybe out of scope. Are you able to, I don't even know who fills in the forms in terms of the user. Is it occupational health or is it the user? And are you able to tell how easy it was to fill in if there are many errors, or but if it's not the user, then it's pretty fine?
So in terms of the number of errors, it's hard to kind of comment on that. In terms of the process wise, I think occupational health have a role in that process, and they make the referrals to the team. So there is a support for applicants to do that process.
yes.
Thank you, Chair. Just a quick question. Obviously, the 26.4% completion rate is pretty low. Certainly based on my experience, we usually, the organisations I worked in the past, we usually aim around 60-70% mark as a realistic target for people to achieve the staff. Can I ask if Rushcliffe have a similar target, and if not, why not?
I don't know if we've got a specific completion target, but I imagine it's to complete the spend of the budget that we allocate in that year. Unfortunately, it's not always down to the ability of our resources to do it. There's sometimes a backlog with the contractors, depending on the complexity of the work and getting permission to do those things. So there's other things that factors in play that cause a delay in those completions. But without going through each case, I wouldn't be able to say whether, you know, those reasons were the reasons for that small completion.
Great, thanks, Sarah.
Just a request, could everybody sort of turn your name plates so I can see them, you see? So I don't want to get the names mixed up in my first committee. Thank you very much. Thank you. Okay, is there any more questions? Yes, Councillor Regan.
I was interested to can't understand the EDI report. Can you give me a specific example of how EDI can be measured, quantified within an organisation like RBC?
In terms of within the workforce, from I suppose ultimately the aim is what goal do you want to get from that data? It's probably the question I'd maybe throw back in this situation.
I would just add to that. There are lots of ways that you could measure it, and there are lots of ways in which you could also challenge those measurements. It is a judgment. So you could say, for example, we do annual staff surveys, and to what extent do staff answer a response as to how they feel included within the organisation, or that they can be themselves in the organisation, or how inclusive it feels. That may be a measure. Somebody may challenge that measure and say that's not the right one or not, but that could be a potential measure. So organisations can set a whole host of different measures. How many events have we ran in a certain year? Have we got useful data? How much data have people completed about their characteristics that may be useful for us to understand? So there are a number of different measures as to what impact and effectiveness that has. That's for an organisation to judge, but there are lots of different ways in which measurements could be obtained. It is clearly a difficult area and requires a lot of judgment and collective thought on what's best for an organisation.
That was interesting because in the corporate overview group, a very similar question came up in the corporate overview group about how broad the topic is and how can it be stripped down to define what expenditure is here, what expenditure is there of the councils. So very similar question, but it is a staggeringly broad topic to what most people understand it to be. Okay, to the internal audit report.
Yep, so I think this is agenda item 6, which is the annual fraud report within your packs. So each year, or 5, I think, sorry. Each year, the authority asks us to produce a summary.
You're at one item too far.
Oh, sorry, I am.
Yeah, this is the annual report, so it's
Oh, we're an annual
number
report.
5. Sorry,
Apologies.
I didn't read the annual, so I apologise for that.
Sorry, annual report. Apologies. Ignore what I just said. I'll start again. Sorry, similar to Max. So I'm Gurpreet Dooley. I'm the partner from BDO. So ultimately, all the reports that you receive as a committee are approved by myself before they are issued, and I am your head of internal audit for the authority. Similar as well, sit for qualified, and I work with a number of authorities, including Gedling, most locally, but a number of other authorities across England. So this particular item is that, as Max mentioned earlier, each year we do a quantum of work, and so for 2024-25, which ended on the 31st of March 25, over that 12-month period we've completed a number of reviews, and I'm required under our standards to make sure that I provide you an annual opinion which says, now we've done all of this work, what's my view of governance, risk and control arrangements at the authority. And this document here summarises and provides further down in there the detail of what conclusion we've reached and how. What you will see in here is it does set out the reviews that we have done in the year, plus a summary of those. Obviously, previously this committee would have received the executive summaries for these reviews. So it provides a summary of those reviews, including some of the ones that Max has just talked about, like EDI and the DFG review. And then we'll also liaise with and speak with management, external auditors, and look at any wider information to help inform our view as to the overall opinion. What I think is quite helpful to see before I go to the opinion, which is on page 60 of your packs, which does a year-on-year comparison in a visual way, which shows you the number of recommendations we've raised in previous years to the current year. What you will see in there, we continue to have the position of that there are no highs that have been raised. There is obviously a number of lows and then a smaller number of mediums. The control design, so the design of your arrangements that are in place, your systems, your policies, your structures. Actually, we've had a really positive year in that everything has received a substantial on how things are designed in the first instance. In terms of operational effectiveness, there's always a difference between how it's actually used versus how it's intended to be used, being the design. There's a mix of 3 substantial and 3 moderate there, which is a slight increase on the moderates, but broadly a very, very strong position. So the overall opinion is across 4 scales, substantial being the highest, moderate, limited, and then no assurance. We are issuing, in line with what we did last year, a substantial assurance on the system of internal controls, and that is based on the reviews we've done, the opinions that I've just outlined, and our discussions and understanding of the authority from all the other sources that we obtain. Also the effectiveness of this committee, your ability to follow up recommendations, all of those things factor into why we say substantial. And I will say this, you are the only local authority that I've issued substantial to this year, previous year, year before that. And so Rushcliffe, we do have, and I think the committee should receive that assurance. It isn't typical to receive substantial. In fact, it is rare, and but we do continue to offer substantial as part of our annual opinion.
Okay, thank you. Questions? Okay, I'm going to, oh, sorry, Councillor, go on.
I think we should thank the staff for getting us a substantial opinion.
I'll say as well, it's team effort, councillors are involved as well, so you are part of the assurance.
Okay, question. I was on the licensing committee in the autumn of last year. It came up in the licensing committee that there was a substantial claim of licensing funds from 2 large venues within the Rushcliffe area over 19 years. Substantial amount of money. My question is, how do we get, if we are always looking at similar things, we're missing things that are slipping through the cracks? It seems to me that there is a problem there with governance for 19 years, that this substantial underpayment from a large venue from 2 large venues within Rushcliffe was only discovered by mistake, and it went into the media. I'd like us to have a think about how we're going to audit those processes and systems to ensure that the locality of what people do is robust and in collecting money in. Is there anything that can be done on audit, on internal audit, to shore up those cracks, to fill those cracks on licensing, for argument's sake, for particular work areas that collect money in?
Yeah, obviously we have the audit plan which dictates, so we set the audit plan which was done at the last meeting, and the audit plan to a degree is flexible. You know, things can be added or taken off if we feel there's certain risks there. It may be, I can take this back with Gurpreet and Max, just look at the plan with a view whether we slip something else in, move something about, and come back again to the committee with a recommendation on that basis.
Thank you.
We're just going to add, from an internal audit point of view, you may not like me saying this, it is the reality. Obviously, we cannot and no internal audit service are able to look at every single area, and therefore there are going to be times where something happens which may not have been identified, may not have been in the plan, etc. What we're also interested in seeing is management's obviously response to that, their ability to rectify things, because you're a multi-million-pound organisation. There are going to be instances and occasions where things don't always operate as you would want or to the standards that you would expect, whether that's management or members. And so when these kind of things do happen, I'll have the discussion with Pete as well to see whether that is a focused area or our management already doing something to look at that, and we look at the arrangements they've put in place to see whether they're sound. And then we will always continually reflect on that to say, does that change our overall opinion? Is that highlighting a cultural issue or wider systemic issue within the organisation? If it does, then see that could change our plan more substantially. But as Pete said, our plan is dynamic and can change. So yes, we do say substantial on the areas we've reviewed and the other intelligence that we're getting. But it's always important that we remain live if there are other issues that could counter that in some way. But I wouldn't want the committee also equally to take the view of, well, hold on, these two things are contradictory as a substantial opinion, but we've got an issue, because that will happen. But we have to also take a rounded view on the totality of all of the evidence that we're receiving. So I will follow up on this one, but I thought that context maybe helped.
There is no portion of blame. I understand that it's a complex organisation. My concern was 19 years of tens of thousands of pounds that hadn't been picked up per year over 19 years. So we need to learn. This is what scrutiny is for. We need to learn by those mistakes and see where it could be reciprocated across the organisation and other organisations that you represent. So very glad that we can get that introduced. Yes, Councillor Regan. Oh, sorry, Councillor Ellis.
Thanks, Chair. I don't want to go off at a tangent, but this situation quite intrigues me. How was the mistake discovered, and what was the mistake? Well, obviously the mistake was that we didn't get the money in.
It was discovered because there were some large events taking place at those venues, so they applied for a special licence, and it was discovered then by mistake, really. And that's my concern, that it has been discovered by mistake.
So did we invoice the charges?
I don't know whether it was resolved, and that's why I'm asking this to be looked into.
Not to conduct the audit in this meeting, so.
Yes, Councillor Wigan.
I just want to note that the threshold for journal entries is £10,000. So if it falls below that, on the assumption, it sounds like it has done, but accrued over a number of years, if it falls below that threshold of 10,000, am I right in saying that that doesn't get audited? Or that falls below the audit threshold?
No, that's not right. I don't know where the 10,000 you refer to comes from.
Obviously, not to talk too much about, with external audit, our colleagues, they have thresholds in terms of materiality, performance materiality, trivial amounts, and they have balances that they will audit in different ways depending on that. But obviously colleagues from Mazars can talk about that. From an internal audit point of view, there are no minimum thresholds. We may raise in a report something around £10, or it could be £1 million. The financial thresholds don't apply to the work that we do. Clearly we are likely to focus on those areas which are larger, more significant, more related to your corporate risks, but there are no financial minimums in terms of internal audits work.
Yes.
I just have to clarify what the journal threshold of £10,000 refers to.
I think you're referring to our internal journals. So anything above 10 is checked off, like signed off as a separate review. So I'll go through all the journals above £10,000. Those below that aren't currently forced to be have a secondary approval in the system because they're low risk.
And just to confirm, Councillor Regan, it was in excess of £10,000 per year. Okay. Any more questions? Yes, Councillor.
On page 60, where you compared the last year's and year before control design and operational effectiveness. So looks like control design is getting better from previous years, and operational effectiveness is that is same as last year. So does it mean our controls are not working effectively?
No, is the short answer. So in the previous year you had one, which was a moderate on operational effectiveness, and this year have 3 and 3. So we will always see a bit of a variance each year, and this is more of a temperature check. If there is a slight up and down, where there's a few more moderates or substantials either way, we're broadly looking at a trend here. Generally, you are falling into the substantial or moderate bracket pretty consistently, and that's quite hard to achieve, which is what's driving that opinion. So I wouldn't take it from that to say if there's a slight increase, which we see here, there's 2 more in moderate for effectiveness, that tells us something more widely, because we can only review a select number of areas each year, and there's 8 or 9 reviews or so. Our general sense of the authority, as I mentioned earlier, is one that is positive and well maintained and controlled. So I wouldn't draw that conclusion. Next year it could be there's 4 moderates or 2 moderates or whatever it may be. Moderate also is another way of saying thumbs up. Generally things are working well. We don't have any material significant groundbreaking kind of concerns in the areas we've reviewed. So I think it tells me the same picture as the previous year.
Okay, any more questions? Okay, we'll move on to the items. I've grouped them together, 4 and 5. It's recommended that the Governance Scrutiny Group considers the Q4 of the Progress Report 24/25, Appendix A, prepared by the Council's Internal Auditor, and 5, it's recommended that the Governance Scrutiny Group notes the Internal Audit Annual Report in relation to 24/25. Can I have a show of hands that accept that recommendation? Okay, I don't need to ask for abstentions or objections. It's unanimous. Thank you very much. Thank you. We'll move on to item 6.
Yeah, thank you very much. So this is an annual fraud report. So something that this committee does is ask for BDO and for us to produce a summary of your fraud or counter fraud arrangements that are in place each year. So this isn't an opinion. It's not us providing a view. It's just us working with management to summarise some key bits of information so that this committee can have assurance of what those arrangements are around fraud and counter fraud. So what this document goes through, it gives you some national information from the Public Sector Fraud Authority and some of their national data about how much fraud occurs within the country, and also what percentage of that is from different types of fraud and what those trends are. It then sets out arrangements for the authority around whistleblowing policies, your risk registers, management meetings, the work of internal audit, and different sources of intelligence that you may receive that could give you indications about whether fraud is prevalent or being managed appropriately if it occurs. Critically, what I think is one of the most important parts of this is that this authority, as with nearly all others, sign up to the NFI, the National Fraud Initiative. This is central government data which gets provided to authorities, where they're using databases centrally to match individuals who are registered to this area with other sources of information, and they provide almost an alert system to say you have Joe Blogs here, and actually it looks like this could be something of concern. Can you go and look into this? And so they'll provide these matches to the authority. The authority will then go and investigate these and identify whether that match actually is something that is relevant or not. Obviously, sometimes matches could be incorrect. So part 7 of the report sets out what that data looks like. It looks relatively consistent between different years from what I can see. Like I said, we're not here to provide an opinion on this. It's just presenting the data and what the position is for Rushcliffe. There haven't been any allegations of fraud reported in 24/5 that we note in here as well. And there has been training, and I know there's more training that's scheduled, I think, for next week as well. And so we just have a summary of that in part 10. So I think I'll finish there, and happy to take any questions on this.
Thank you. Questions? Any questions on item 6? No? Okay, the proposal is to recommend that the Governance Scrutiny Group consider the annual fraud report for 24-25. I think we've considered it. Those that are happy with it, please raise your hands. Okay, unanimous. Thank you very much. Thank you. We'll move on. Item 7, external audit annual report. Sorry. Oh, sorry. Yes, I've just been reminded how impolite of me. I know you're dying to stay, but you're welcome to leave the meeting if you want. You're going to stay for a little bit. Right. Okay. Brilliant. That's great. So you're going to see how the external, or the internal external auditor performs. So let's go for it. Thank you very much.
Thank you, Chair. So I will try not to go on for too long, of course, but I will take the reports, of course, as read. But I would like to pick out 2 areas of our external audit plan that I thought might be of interest to members or you might have questions on. And those are, as you have on page 91 of your packs, our audit scope, approach and timelines, emphasis on the last bit, and also our areas of increased audit testing, if you like, what we call our significant and enhanced risks, which I believe are on page 99, if I'm not mistaken. Or the one I'm going to talk about is. So on the timeline then, members will no doubt be aware of what's going on in local government audit at the moment. And Rushcliffe has been, I don't want to say lucky, because of course it is because of your hard work, but Rushcliffe is not experiencing what many councils around the country have experienced last year and will probably continue to experience, which is they're not part of the local audit backlog. Nevertheless, they are still impacted by the deadlines that have been brought in by the government. And as you know, emergency measures were brought in last year, and which have a plan over the next few years of getting audit back on track and bringing that deadline back to where it used to be, which was the autumn. So for that reason, this year, we still have a deadline of February 2026. So February, like we did last year, for the 23-24 audit, we had a deadline of February 2025. That will remain the same for this year. And then in subsequent years, that will then be brought in. Our audit timeline is broadly similar to last year. There was one other difference as well this year. We are now operating under the Code of Audit Practice 2024, which has a shorter timeline for value for money conclusions. So you may have noticed that in prior years, we were able to conclude on the value for money work after the main financial statements audit. We no longer have that option. So we must report our value for money conclusions and commentary to you by November 2025. So we are currently planning to bring our audit completion report, we hope, to the September Governance and Scrutiny Committee, and also our auditor's annual report, which will contain our value for money commentary and conclusions. So that was the first bit I wanted to just point out on the timeline, which is slightly different from last year. We have also like to point out, since we submitted this report in April for management comment, we have completed a significant portion of our planning and interim work. We will be coming back to complete our final audit work very, very soon, once we finish NHS. So that will be at end of June and July onwards. So that's the first bit I wanted to point out. The other bit is the risks. So you have the same normal 3 significant risks that we have on basically every council audit, well, particularly district and borough councils. So as usual, we have the valuation of the net defined benefit obligation / assets. We have the management override of controls, which is, even for the private sector, that's mandatory on all audits. Of course, valuation of landed buildings, but then we have a slightly new one this year, which we have put as enhanced risks. So it's a slightly lower grade than the other risks, which is the implementation of IFRS 16. Now, for those of you who are not aware, and apologies for those of you who are already aware, IFRS 16 is a standard that, let's say, revolutionised how leases are accounted for, particularly for leased in assets. It came into the private sector in 2019, if I'm remembering correctly. We've had it in NHS from 2023, and then it was fully brought in last year. And this is the first year for councils they will have to implement IFRS 16. So the reason it's an area of enhanced risk is firstly, of course, because it's new, so you have a greater scope for error, but also because it has the potential to massively increase figures on the balance sheet, because a lot of leases, particularly, like I said, for leased in assets, which were previously held off balance sheet and just expensed through the I&E, will be brought onto the balance sheet, and you will have what we call a right of use asset and then a corresponding lease liability. So we have already been communicating with management on their approach for IFRS 16 this year, and that will be an increased area of focus this year. So I just wanted to bring that out as something slightly different for this year. Of course, welcome any questions or comments on the audit report that anyone might have.
Any questions? Questions? No questions. It must have been so much better than the last lot. That's all I can say, Jennifer. Very good. Thank you very much.
I was just going to say, I'll just add at this point as well that the statement of accounts was published for 24-25 was published on Wednesday last week, so the 11th. So that's available on the website if you want to take a look at that.
Thank you. Are we sure there's no questions?
You can all read it while you're in the back garden.
Absolutely, that's excellent. Thank you very much, Jennifer. Thank you. I will read out the recommendation. It is recommended that the Governance Scrutiny Group accepts the 24-25 external audit report. Can I have a show of hands, please? It's unanimous. Thank you very much. Thank you very much, Jennifer. As the last time, you are free to go if you wish to stay riveted to the edge of your seat for the group. You're welcome to stay, but thank you very much. Okay. Annual governance statement. That's over to you, Peter, isn't it?
Yes, I get all the best gigs on this committee. Those of you that have sat on the committee before will recognise this document, hopefully. It goes with our statement of accounts, hopefully when we've completed those by September. No pressure on the external audit, but that's
Sorry, just can I butt in? For those that haven't been on this group before, that are not familiar with governance scrutiny, can you just explain to the group what annual governance statement is for and why we do it?
Yeah, well, I will come on to that. Sorry, that's my speech. Thank you. Yeah, so it is well, the governance statement itself is we have it in a standard format. It's a format we use, and we follow both Solace and SIPFA guidance. So it's sort of a prescribed content, not necessarily a specific format. If you look at an annual governance statement at Rushcliffe, it won't look the same at another council. And but the content, you know, it should be the same. And what you will notice, sorry, is you look in the document. So if I take it to page 122, you'll see under section 2, there's various principles that are boxed off. So within various sections, we're relating the principles. That's the principles within the Solace and SIPFA document that are prescribed. What we're trying to do there is just relate our content to those principles, so there is that relationship. So what this document is really, it's an important and formal recognition of the effectiveness of governance arrangements during the year and the impact of issues on the horizon. And clearly you'll see, those of you that hopefully you've all read it, but clearly local government reorganisation is going to be a significant issue in terms of governance for this council and, well, all those councils involved in LGR in one way, shape or form. And that is referenced quite a lot in different threads within the documents. What I can say from a governance perspective, at the moment we have no significant issues concerning governance, and I suppose when you listen to if you want to triangulate, obviously you listen to what external audit is saying, what internal audit is saying. You know, largely, you know, we've got, you know, up-to-date accounts, healthy accounts, get a substantial opinion from internal audit. So when you start triangulating that with when you look at things like the council's finances, the budget position, etc., and triangulate, that, you know, if we were in trouble on in any of those areas, then clearly we would have some good governance issues, and that's important really of this committee. It is an important committee, so particularly it's more when things go wrong, it's this committee that will be the, you know, things will be in the firing line in this particular committee. So there are the 7 principles, and actually we have changed the tried to sex it up a bit actually, really. On page 121 there's actually a graph in there. I will apologise, the graph is a bit small, and we will look to make it larger, and perhaps send the graph separately to the group as well afterwards, so that you can actually might help with your reading it, because I can't read it, to be honest with you. So, but that those, if you look at that graph, it does highlight the 7 principles and how they all relate to each other. What I will say also is when you read through the documents, it should really reflect what you know about the council. There shouldn't really be any surprises. So from your perspective in reviewing this, it's looking at it, well, is there anything in there? You think, well, actually, this is happening, why isn't that in there, or something like that. So and it is that. It really focuses on the mechanics of governance. It talks about the constitution, risk management, the statutory officer and senior management roles, the roles of internal and external audit, etc., etc. And then, but what I say probably the most interesting part of the report. So if you decided, I don't particularly want to read through it all. Section 4, which is from page 132, is really the more focuses on where our key issues are at the moment, where the key challenges are. So it's the real juicy part of the report, pages 132 to 135. So that focuses on really what are the key governance issues for the authority. So local government reorganisation, the council's financial position, anticipated changes to local government funding system, any significant risks noted by external audit, which Jenny just touched on, and things like the challenge of climate change. So it's those specific issues that affect the authority. On page 134 is a table of actions, which actually dovetail in 2 ways. It's in relation to actions in relation to last year, but they also apply to this year. And there's a new chart entry, obviously, with local government reorganisation. So that's a new we've added that in as something that obviously we need to focus on and we'll be reporting on as an authority as we move forward over the next year and beyond. And finally, the actual statement, it goes in the, as I said, September's accounts, and it is signed off by both the leader and the chief executive. So they have to basically own the document in terms of being a true representation of governance for the council.
Thank you.
That concludes it. Thank you.
Thank you. Any questions on the observations? Questions? Yes, Councillor Campbell.
I'm hesitating asking this because I'm not really sure I can formulate it properly. I'm talking about actually another council here, so we don't need to guess which one, but sometimes it's not clear to me where policy is originating in that other council, another council. And I like to completely really understand the path to the, this is the way we do it, this is policy comment that you sometimes get as a councillor, back to where, right? And I feel like I should know this. I'm a councillor, I've been a councillor a while now. I should understand where policies come from. To what extent is it followed through from cabinet, and what extent is it followed through from council? When council takes a motion and makes a decision, for instance, does that automatically become policy, or does that then go into cabinet? I mean, what I'm trying to talk about is what is the decision-making process, which is what you follow, I guess, as officers. What is that pathway? Because honestly, it's not clear to me in all cases. Sorry.
So, where policies emanate from it's probably not clear because I don't think it's not like a silver bullet solution where that's a policy, it goes to council, it goes to cabinet. There's different levels of delegation for different types of policies, different levels of importance. You know, so for example, you know, if you take the budget, for example, we know that goes to full council. The the constitution does, the corporate strategy does, those big sort of documents, and then and also it depends on legislation. Some legislation might actually dictate that certain things have to go to council, where in a lot of cases it's not quite as straightforward as that. So it could be cabinet, or it could be a delegated decision. So yeah, so it's not you probably have to be confused because it's not as a straightforward picture.
Okay, any more questions? No? All right, okay. Right, okay, we're on to confirming the annual governance report. It's recommended that the annual governance statement 24-25 appendix 1, which incorporates the actions for the following year, be reviewed and approved. Can I have a raise of hands that you accept that? Okay, thank you. That's unanimous. Thank you very much. Thank you. On to item 9, capital and investment strategy. 24-25.
Thank you. So this report summarises the outcome position for 24-25. It starts with a look at the prudential indicators. Slippage in the capital programme meant that capital expenditure was lower than budget. Carry forwards of 4.308 million have been requested, and full details can be found in the final outcome report for July Cabinet. Investment balances were higher than the budget due to Section 106 monies and the capital underspend. This has resulted in favourable investment income. As the external auditors have already mentioned, in 24-25 a new accounting standard came into effect, IFRS 16, which recognises right of use assets and the lease liability onto the balance sheet. This impacts on the CFR. Table 3 shows the avenue CFR has increased by 2.752 million due to IFRS 16. The closing CFR was 9.989 million. Paragraphs 4.2 to 4.15 summarise the PIs relating to borrowing but not applicable. The liability benchmark again reflects the need to borrow over the medium term. Table 4 shows the ratio of financing costs to net revenue streams. The actual for 24-25 is a negative as a result of investment income exceeding MRP payments. Table 5 shows net income from commercial and service investments. And whilst income from investments is higher than estimated, net revenue streams are also higher due to grant income and business rates. Paragraph 4.18 shows the indicator for the upper limit for fixed interest rate, which was exceeded due to the council wanting to look into higher interest rates at a time when base rates were falling. This indicator should not be restricted in such times. Table 8 shows investments held at 31st of March 25 and is just a snapshot at a point in time. The average interest rate received on investments during the year was 4.69%, resulting in investment income of 2.168 million against a budget of 1.043 million. The Monetary Policy Committee voted today to maintain interest rates at 4.25%, but they are expected to fall to around 3.5%, 3.75% this time next year. The Council's investments are spread over a diverse portfolio to protect from interest rate risk, whilst at the same time retaining sufficient in easy access accounts for liquidity purposes. Table 9 shows the fair value of the diversified funds, which have seen significant fluctuations over the last few years, but are held for long term. There is a reserve to mitigate the loss,
currently 1.173 million, with a further 137,000 proposed from the 24-25 underspends. These diversified funds return an average rate of 5.29%, over 50 basis points more than the money market funds. Paragraph 4.25 explains that it has come to light that some banks which have historically been classified as secure are actually deemed unsecure investments by our Treasury advisors. This means that during the year we had 4.9 million invested with Barclays against a limit of 3 million, whilst this is a breach of the limits in the strategy, it is recommended that the limit be increased, and even though technically there is a breach, the Council continues to spread its risks by diversifying its portfolio. Paragraph 4.26 details reserves, movements and balances. Again, more detail and further explanation can be found in the Cabinet reports in July. Overall, despite volatility in the economy and falling interest rates, Treasury management performance has been exceptionally good this year. Paragraph 4.8 onwards covers asset investments. Table 12 shows these investments yield a return of 6.06%, well above the base rate, and exceeds the average return on our Treasury investments. Chart 2 shows investment property by category, which is predominantly office and industrial in nature. Table 13 demonstrates our reliance on commercial income. Currently, commercial income accounts for 13.4% of the total income of the Council. Paragraph 4.34 explains the code requirement for members to be sufficiently trained. To conclude, we are still in a very fluid environment with falling interest rates, inflationary pressures and trade tariffs, but we will continue to monitor the TM position throughout the year and take advice from our Treasury advisors. And it is recommended that the counterparty limit for banks is increased from 3 million to 5 million.
Thank you, Laurie. Thank you. Any questions? Yes, Councillor Owens.
Thank you, Chair. Thank you for the report. One of the areas I'd highlighted in advance to query was the recommendation to go from 3 million to 5 million. And obviously, as you've gone through that, you referred to obviously 4.25, where the advisor advised that it was insecure when it was believed to be secure. So we then ended up with 4.9 million pound in Barclays. So the question is, was that 4.9 million pound originally in Barclays, or did we move it into Barclays due to those reclassification of the insecure? I'm not clear.
I believe it was always in Barclays, but it was just identified as a secure account, and then conversations with the Treasury advisors showed that it was actually classed as an unsecured account, because we'd set our limits with those banks in mind as unsecured. We'd actually underset the limit in theory, so the Treasury advisors actually advised that it's a percentage of your overall investments, and if you work that out, it's about 5 million anyway, which is what we had in there. So theoretically, we have breached the limit that we set ourselves, but in terms of our Treasury advisors, we're within the limit and the range that they would advise upon.
Thank you. I mean, further question into that. I mean, I appreciate it's within the limit of our advisor setting, but we set a limit of £3 million. Are we satisfied there's no other areas that's in breach of this? Because for me, here that we've got such large sum of money in an account that we believe to be secured, which actually transpires to be unsecured, what we do as an audit, internal audit purpose, to make sure we've got no other assets of that risk.
I will just point out as well that we do still work within our Treasury managers' counterparty limits. So the bank, whilst it might be classified as an unsecure, has still got a very high rating and allows us to diversify into different funds. So the fact that we've got so much money at the moment, as Marie pointed out, it was 76 million at the end of the year, means that we have to place our money to spread our risk into those different areas, which would mean that we'd have to put a higher amount into that account. What we do is bring in the controls, like you've said there, we've not spotted that was classified differently. So what we've done is worked with the Treasury advisors to bring in a new measure, so that when we do our reporting, which we meet with them on a regular basis, we will now classify all of those banks and compare them to our strategy, so that we know that we are within those limits that we've set.
Okay, we're happy with that. Yeah. Any more questions? Yes, Councillor Matthews.
So just off the back of that last question, are we happy that we should be upping that limit rather than actually putting more of our money in safer investments and upping our limit on the safer investments rather than upping the limit on the ones that are identified at risk? I don't quite understand the logic there, but maybe explain that to me.
As I've said before, the Treasury advisors, the people that are in the know, and they advise that it is at that limit. So they compare to other local authorities with similar investments and benchmark us against those. And the percentage that's in unsecured is higher than what the limit that we've set ourselves. So effectively, we've set ourselves a lower limit than the industry norm. So what we're saying is we're going with the advice of the Treasury advisors, which is to increase that limit.
Agree with that? Yes.
And just to add, obviously, their Treasury advisors, it's certainly my job, Section 151 officer, to make sure investments are in the appropriate levels and different, where we invest things. And that's the policy really of the council is about obviously balancing risk. We do that by not putting all our eggs in one basket. It's having a spread of risk, and that's amply demonstrated. If you look at page 143 in the table there of investments, you can see there's a whole wide range of investments with different institutions for different amounts. But so it's matters of, I suppose, the professional senior financial officer of the council. It's my responsibility to make sure that we're balancing the risk, so that, God forbid, if anything went wrong with any of the institutions, that if there was any loss, it would not have a significant effect, because hopefully you've got enough elsewhere.
Yes.
Thanks. At risk of asking a question that's probably been asked before, I don't know. 4.22, you mentioned 106 gets mentioned, and it was mentioned in the sort of preamble at the start. I guess I know that we hold that money for the county councils for them to ask for projects, but some of that money's been in there a long time and would have gained substantial interest over that time, and all the money that will be coming in will gain substantial interest as these projects are all completed and money comes into the borough. Where does that interest on that go? Because is it coming to the borough as a nice little profit for us? Does it go to the county when they ask for it, or does it go to the parishes who call for that money? So if you were, for instance, a parish owed 160,000 for a project, do you get 160,000, or you get 160 plus 10 years worth of interest at 4%? Like, what? I just want to know, because it's something that is constantly coming up at parish level, where there's frustration about 106 money, and to think of it sitting there earning a nice little income for another council is a little bit. So I just wanted to clarify what happens there. Okay.
In short, the answer is yes, it accumulates with that investment. So we hold it in a separately ring-fenced account. We do invest it, obviously, as Marie said, we invest all of the money that we hold. But when we repay it, it will go with an interest calculation, and we work out that interest and repay it to, along with the Section 106.
Hey, we're happy with that.
Yeah, brilliant.
I've experienced that at a parish council that they were doing a 106 was a parish hall, and obviously it went up over COVID. It went up in the cost for building, and the precept had actually gone up, not to cover the costs, but it had gone up. So not the precept, the 106 money. Yeah. So I've actually seen that work in practice. So I can answer that. Yeah. Questions? Yes, Councillor Golden.
Thank you. If the reserves are going up, do you change the split in risk in terms of relative fraction or absolute amount? Does that make sense? So do you have high interest for 50% of it, or so many million?
Sorry, there are some limits that are, so we've got an upper limit for fixed fixed interest investments and an upper limit for variable, and that does depend on the total value of your investment. So as through the year that will fluctuate. But in terms of with institutions, that is a fixed amount in accordance with our agreed policy.
Any more questions? No? Okay, thank you very much. The recommendations are that the Governance Scrutiny Group consider and scrutinise the capital investment strategy 24-25 and its position, agree the changes in the money for from 3 million to 5 million in Barclays. So could I have a show of hands if everybody's accepting that unanimous decision? Great, thank you very much. Right, item 10, the work programme.
Thank you, Chair. There's not very much to say on this report. You can see on page 153 and 154 that there are planned reports to the next 3 meetings of this group. Based on what Jenny from Mazars previously said about the new regulation that they work to, the item of annual audit letter and value for money conclusion that is currently on the December agenda will either move to the September agenda with the external audit completion report, or they will potentially shift to the December, depending on when we actually complete the audit. But other than that, as you can see on the report, that's the proposed agenda.
Any questions? Can I just come in a moment for everybody? That obviously I'm new to chair of corporate governance group. I am keen for this group to be a scrutiny group. I'm keen for issues to be raised and resolved effectively. I don't want it to be a talking shop. So as we move forward throughout the year, I'm keen for this for robust debate to happen and resolutions to happen. So the work programme is the work programme, but I don't see it as being fixed. I see it as being dynamic. I might have officers arguing with that, but then I'll argue with them behind closed doors. So that is what I'm keen to achieve in my year as chair of the Governance Scrutiny Group. So this is what we've got put forward in front of us. Have we got any observations? No? Okay, so can we approve the work programme for the next year? Brilliant. May I take this opportunity to thank everybody, and I truly mean this, for turning up on a beautiful sunny day to what is quite a heavy scrutiny group. It's been a pleasure to chair it for the first time, and I thank you and wish you all a good evening. Thank you.